Be Wealthy and Smart, episode 1123.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about, will the Fed slow down interest rate hikes? Because that's what they said on Wednesday, and we're getting more data coming in all the time. A lot came in yesterday. I'm going to share all that news with you and show you the big picture of what the Fed is seeing, what inflation looks like, and whether that means that interest rate hikes might just slow. So on Wednesday, the Fed was speaking at the Brookings Institute, and Chairman Powell made a lot of very interesting comments. He said the Fed was slowing down from the breakneck pace of 75 basis point or 0.75% interest rate hikes that have prevailed since June, and would feel the way towards the peak interest rate needed to slow inflation to the Fed's 2% target. He said the time for moderating the pace of rate increases may come as soon as the December meeting. He also said he continues to believe in a path to a softish landing, even if the path has narrowed over the past year. So this created a lot of optimism among investors that the Fed's going to deliver a smaller, maybe 0.5 percentage point rate hike at its next meeting on December 14th, after having 4 straight increases of 0.75% for 4 straight months. Now, in November, the Dow already started to rebound sharply, and the October lows have held. In November, the Dow was up 5.7%, the S&P 500 was up 5.4%, and the NASDAQ was up 4.4%. So we've had some nice rebounds since those October lows, and with this good news, the market really shot up on Wednesday, selling off a little bit yesterday, but just that change in tone from the Federal Reserve was a signal that we may be coming to the end of interest rate hikes, or at least there's some moderation. Now, we're going to talk more about some additional data that came in, because remember, the Fed is data-driven. So they're looking at the numbers, they're making their decision based on numbers, and if we have less inflation, if it's looking like things are moving in the right direction, that gives us hope that the Fed is going to be moderating a bit. Now, yesterday, some important data came in. The core personal consumption expenditures price index rose 0.2% in October, which was slightly below the estimate. The index increased 5% year over year. Also, personal income jumped 0.7% for the month, well ahead of the 0.4% estimate, and spending rose 0.8%, which was as expected. Weekly jobless claims totaled 225,000, a decline of 16,000 from the previous week, and below the 235,000 estimate. So fewer people were jobless than was anticipated, and that's good news. And then, unfortunately, Challenger Gray & Christmas, who's an outplacement firm, reported that planned layoffs increased 127% on a monthly basis in November and were up 417% from a year ago. So many more planned layoffs, 4 times as many planned layoffs as were happening a year ago. But the good news was that inflation in October rose about in line with estimates, sending a sign that price increases at least might be stabilizing. Food and energy was up 0.3% for the month and 6% annually. The monthly increase in October was the same as September, while the annual gain was a little bit less from the 6.3% pace. So for food and energy, we're getting some positive movement here. According to Chris Zaccarelli, Chief Investment Officer for Independent Advisor Alliance, he said the data was a Goldilocks report as it showed core inflation continuing to drop. If inflation keeps coming down, then markets will keep running higher as investors will conclude that the Fed won't need to raise rates as high or keep them as high for as long as previously expected. And that's really the whole story here, is that things are starting to improve. We're seeing little incremental improvements in inflation and other situations that the Fed is monitoring. And the Fed has already said they may not have to tighten as much as expected. This is just the beginning, the initial turn perhaps of the Fed moderating more. And that's really the key, is moderation. Based on this new interest rate track, one of my favorite market strategists is Ed Yardeni of Yardeni Research. And he said he thinks the S&P 500 may get to about 4,800 in 2023, which would mark a new all-time high and is more than 21% higher than where the index is currently trading. So that would be great news to have a 21% increase next year in the markets if we can hold the lows and if inflation can continue to improve and the Fed starts their moderation of interest rate hikes. This is all very good news, and the markets are going to take that positively. The contrary side of that is if we saw some sort of an unexpected increase in inflation. That would be very bad news, but that's not what we're seeing. We're seeing this trending down. We're seeing the data, which is what the Fed's going to be using to judge their future increases. We're seeing that data move in the right direction. And that's what we've been waiting for. That's what markets reacted to on Wednesday in a huge way. And that's what I believe we're going to see through the rest of December into January. So things are looking up. It was very welcome news and an early holiday gift for sure. And I'll be speaking at the Link2 Global Investor Conference December 6th through 8th. You do not need to be an accredited investor to sign up and attend. And for anyone who cares about their wealth and their wealth building, I definitely recommend that you tune in to this free event of extraordinary knowledge and speakers. You can sign up through the link in the show notes, and I'll see you there. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.